Hello everyone, my name is Handi. My site number is 186. From now on, I am going to present my news report. Fed cements dollar dominance, fueling record overseas borrowing. The terminologies I learned from this piece of news are: first, financial meltdown. It refers to events like steep fall in stock markets, decline in asset values, corporate losses, etc., that hurt the economy and lead to losses for investors. Second, greenback. It is informal for the US dollar. The term derives from the fact that dollar bills are green. It dates back to the American Civil War. Third, debt servicing costs. It is the cost of borrowing money that is due to the passage of time, the rate of interest, and the amount outstanding during the reporting fiscal year, plus any fees associated with such financing arrangements. Fourth, crowding out effect. It is an economic theory arguing that rising public sector spending drives down or even eliminates private sector spending. So, what happened? Overseas borrowers have flocked to the dollar this year at a record pace, with sovereigns from Indonesia to Colombia and companies from Nissan Motor Corporation to Manila's water utility racking up sales of $1.29 trillion. Why did it happen? There are several reasons behind that. One reason is that companies and countries want to ensure that they have enough funding when crises come, and the dollar markets are the only real source available. There is a lack of global alternatives to dollars. The euro status as a reserve currency remains limited, and China's currency is still subject to capital controls. Another reason is that Federal Reserve has unleashed massive liquidity. Interest rates are expected to be near zero for years to come. Dollars Dollar becomes more attractive as a funding source. The Fed introduced corporate debt purchase programs that helped ensure the flow of credit even as coronavirus lockdowns swelled up the economy. The Fed also enlarged and expanded swap lines with monetary authorities around the world to address a sudden shortage of dollars abroad. Moreover, from the sovereigns and companies' side, Indonesia's government can avoid crowding out local rupiah issuers by selling debt in dollars. Nissan is struggling to bounce back from both corporate scandals and the COVID-19 crisis. The broad base of international investors was appealing when it turned to the dollar debt market for the first time in decades. What are the potential impacts of the event? The critical role of the US currency leaves emerging markets reliant on American policy settings. Fed tightening down the road could spur dollar appreciation in the future. If dollar sees a sustained appreciation trend, it will drive up debt servicing costs, potentially creating repayment difficulties for some down the road. For emerging market economies in particular, it can create whiplash effects on capital flows and exchange rates. As far as I am concerned, while dollar is an attractive source of funds under current situation, the side effect of over-reliance on dollar is foreseeable. Therefore, it might be better for companies and governments to be more prudent concerning the issuance of dollar debts. That is all of my news presentation. Thank you for listening.